Consumer Home Loans. These are the men who help all the agents here at your home sold guaranteed realty. Today we'll be talking about financing, how to win multiple offers. And as you know, the market is extremely busy, right? So if you're a real estate agent watching this, every house, as you know, have 10, 20, 30 multiple offers. If you're thinking of buying a home in today's market, how would you beat out? Let's talk about financing today. And on this panel, we have Carl Brackens, Jason Tan, John Abel. These guys are the mortgage genius. Let's talk about finance, you guys. So on you, Carl.
Okay, all right. Thanks for that warm introduction, Rudy. Thank you so much. Glad to be here, guys. This is Carl Brackens, Consumer Home Loans. I have three of my colleagues here with me, including Rudy, because Rudy's an advocate of teaching us and showing us how to make things happen within the real estate community. So we're going to talk about financing tips to beat out other buyers and win multiple offers. That's something that we put some thought to. We want to go over some tips and tricks. And just to give you guys an idea of how we're going to do it, I'm going to give you kind of a quick overview like I'm doing now. And then Jason Tan is going to share some insights on what he's doing with some of his best practices and people that he's worked with in the business to get some offers accepted. And then I'm going to give you a couple of more ideas and nuggets. And then we're going to turn it over to John. And John's going to do an outstanding job of showing you a PowerPoint presentation of some cool things that we can do to get those tips or to get those offers accepted. Okay. So with that being said, Mr. Jason, what do you have for us?
Yes, hi everyone. My name is Jason Tian. I am not only a loan officer, but also a team leader for Your Home Sold Guarantee Realty. So I have experience being a listing agent myself. When I receive like 20 to 30 offers, how do the other agents make their offers stand out? Is they would have their loan officer call me, text me, and email me and talk about how strong their buyers are. And that really make their offers stand out because I will remember now, oh, this loan officer called me about this buyer. So I know all the agents gonna try to call me, but I won't be able to remember all of them. But when another person call and text, then it'll make me remember the offer, and then I will pay more attention to that offer. The other thing I notice is some buyer will, when they make an offer, they only want to show, let's say they put 20%, they only show 20% of their asset, but a lot of them have more than 20% that they said they don't want to show. But nowadays, I believe you need to show everything you have to make your offer strong. So if you have a 401k that have like $500,000 to $1 million in there and you don't want to show it, that will make your offer stronger. And then you can have your loan officer call the agent and say, look, my buyer have $1 million in their account, and they will be able to close the loan. And that I believe will make your offer a lot stronger if you can show more assets when you make an offer. And that's what I would like to share with you today.
That's a good point, because I've seen scenarios where offers go through and the borrower is kind of holding back. So if you're a buyer's agent, make sure you're telling your borrower, no gains, guys. Let's put our best and final. Let's put it out there. Let's show exactly how much we're worth, our net worth, our assets. Put everything out there so the homeowners can make an intelligent decision to go ahead and kind of feel through all of the offers that's coming through. I actually seen a scenario where it was 30 offers coming through. Some buyers was educated and they put their best numbers out there, and then some buyers thought it was a buyer's market and they putting, you know, just a little bit here and there, and it didn't help them at all. So thanks a lot, Jason. Appreciate that. That's great feedback. One of the things that I like to mention, if you're a real estate agent and you are looking to work with another real estate agent, why not make that be you? In other words, why don't you have the listing and why don't you take care of the buyer as well? So if you have a buyer that needs to be pre-approved, let's get them pre-approved. After they're pre-approved and the buyer give you their shopping criteria of where they want to be, at that point, start looking for properties that are not on the market, that's not in the MLS. When you find a property that's not in the MLS, you're not dealing with a lot of competition. It's going to be easier to go to that homeowner and say, hey, I got a pre-approved buyer. And then we can go ahead and show all the financials, and we can give all the reasons why they should, you know, go ahead and take a look at that, as opposed to a deal that's already been sitting on the MLS and you got 30 offers and you're going to have to compete. So that's number one. shop for properties that's not on the market to get your offer accepted. Number two, have more than this traditional way of getting your properties financed. For an example, we have a scenario where a client owns their current home and they want to buy another home. Well, we can do what we call cross collateralization. So that means taking the equity out of home number one and using that equity to go toward home number two. So that's one of those unique ways where if the borrower doesn't have a lot of cash, they can use cross collateralization to kind of help them buy another property, which is a pretty cool trick to move forward. And now I'd like to show you my screen real quick. So let me do a quick screen share. Can you guys see my screen okay? Current slide. Okay, so give me just a second here. Where's that? Okay, so getting your offer accepted. Let me show you this real quick. Once you are now competing and you do have multiple offers on the table, as a lender, one thing that we're doing is we're sprucing up our pre-approval letters and we're adding in 3 components. I want to show that with you really quick. So in this particular case, we have fully underwritten pre-approval that's added. We have the information's been verified, that's added. And then we have the QR code. And with the QR code, we literally have taken these 3 components. The listing agent can take their phone, go to the QR code, and then a video would pop up. And then the video would talk about all the cool things that that borrower has so we can get them pre-approved and get that offer accepted. Then we talk about the 5 big reasons. And this is included in the ultimate offer package. So these are some of the things that we have that we can bring to the table to share with you guys on how to get those offers accepted. And now, John, I'm gonna go ahead and turn it over to you where you can kind of share what you have to work with as well.
Before we go to John, did you guys hear what Carl was talking about and what Jason is talking about just now? If you're thinking of buying a home, the easiest way to beat out multiple offers is to get access to homes before it becomes available to the general public. All right, so here at Your Home Sold Guaranteed Realty, we have access to homes, including homes that's not yet available to the general public. Right, so for example, bank foreclosures, new homes, new constructions, homes that's coming soon. Right, so in fact, in our database, Carl, I'm not sure if you know, in our database, we have over 2,500 homeowners that have raised their hands and said, hey, I'm thinking of selling my house. So the easiest way to beat out multiple offer is to intercept before it becomes available to the general public. So if you're interested to get a free list of homes that match your home buying criteria that's not yet available online, call 626-789-0159. Again, 626-789-0159, or go to www.yourhomesoldguaranteed.com, yourhomesoldguaranteed.com, like Jason was saying just now. So think about it. Not only we have access to these homes before it becomes available to the general public, now we put together the ultimate offer package, kind of like what Carl is showing you. There's a cool video. Carl is going to make the buyers look good. And like Jason said, the loan officer, Jason, Carl, John, is going to pick up their phone and communicate to the other side, to the listing agent, to the owner of the house, how solid this buyers is. Okay, so I want to emphasize some of the points that you brought up. Back to you, Carl.
Okay, that's a good point, Rudy. And one thing I really want to point out, guys, the best niche market, I mean, you can work with the luxury market, you can work with the first-time home buyers, but that sweet spot is that move-up buyer. When you're working with the move-up buyer, not only they're the buyer on one end, but they also the seller on the other end. So that's a market that I highly encourage you guys to go after. If they have a home to sell, you're the listing agent there and you're working with them as a buyer. So John, we'll go ahead and turn it over to you. What do you have for us?
Okay, I'll go ahead and share my screen then. Let's see, there we go. Did that come up? Oh,
Yep.
okay, very good.
We can see it.
So my name's John Abel.
Not yet.
We're on the screen, the second screen. It looked like the second monitor.
Okay. Let's see here. My apologies. How about now? Very good.
That's it. Thumbs up. Yep.
Okay.
That's it.
My name's John Abel. Been a loan officer for 35 years and just wanted to introduce you to my partner and wife of 35 years. We work together as a team, especially with those Spanish speaking clients. And I'm just going to, we don't have very much time, so I'm just going to focus on a couple of USPs that we want to push, which is our guaranteed on-time closing. And this is something we went over last time, so I wanted to repeat it real quick. This is showing the synopsis of a 12-day closing. So one of the things I want to emphasize that a lot of agents forget to do is before you make the offer, let's do some homework. Not only the pre-approval like we just talked about, but also let's go ahead and let's do an automated appraisal. And what I'm referring to is an instant appraisal that we have access to that has bank level acceptance. So we can use that appraisal, run the DU, get the pre-approval, and if we get a waiver on the appraisal, you're many steps ahead. Of course, you got to get the buyer to agree that they're not going to want to have a full-blown appraisal done. As long as they agree to waive the appraisal, they're happy with the house, they want to have that advantage and get the house, then that'll speed things up because the appraisal is done, okay? And if we have a DU approval with that appraisal waiver, we can control the closing. And also the other thing I wanted to explain too, or repeat, is day one activity. When you make an offer and you want us to, let's say you get an accepted offer, on day one, not only can we send out the disclosures, but we could also order the appraisal, okay, if that needs to be done. If you did not get a waiver, we can also order the appraisal on day one, okay, and that puts us ahead of the game if we have to do an appraisal. But I want to reemphasize, if we get the appraisal waiver, that's going to put you in a better position if your buyer agrees to go along with that, because now you have that ability to remove the appraisal contingency, okay? So that was a big point that we had talked about before. The other point I wanted to make is when we get to the end and we get a clear to close, we have the ability to draw docs on that day. So that cuts a lot of time out of the picture. In between, during the process, one of the things that takes up time with a lot of lenders, they wait until they get that clear to close, their final approval, to issue out a closing disclosure. Because what happens when you send out the closing disclosure, you have to wait. It's called a cooling off period, and that's right here. And that's 3 days or more that can eat up your time. We send out the disclosure right at the very beginning of the process, okay? So in all different parts of this whole process from beginning to end and before, we make sure to do things so that it gives you the advantage of speed and it puts us in a position to be able to close quickly. And the other thing I wanted to mention too is our other USP as far as guaranteed best rate, okay? We have this agreement with Rudy, so we're gonna make sure to have the best rate possible. Of course, if your client, you're trying to, let's say you're trying to give your client over to us and maybe they're working with somebody else, they're probably gonna get a quote at that time. If you just let us know what that quote is, we'll make sure to match it or beat it. And then as long as we're in a position to lock it, we will try to lock it at that point, okay? To guarantee what we're telling them. And I think I'll summarize there because I know, Carl, you wanted to kind of finalize it, but I wanted to emphasize that instant appraisal so that we can do the appraisal waiver. That was the most important thing that I wanted to mention. And I'll turn that over to you, Carl.
Okay, so that's a good point. And on that, guys, keep in mind, the whole goal here is to get that offer accepted. That's our goal. We want to get that offer accepted, and to be able to close quickly, maybe one little tool you can put in your toolbox to get that offer accepted. Now, we have another thing that we're working on, and it's not finalized yet, but we want to be in a position to allow the seller to dictate what's their closing date, and then we'll match their closing date. So you may have some sellers who say, I need more time. So we could literally close the deal and then allow the borrower, and it's owner occupied, allow the borrower up to 60 days to move in there. So we want to be flexible with the seller, since the seller ultimately has to make this decision. So our goal is to get the offer accepted. As far as financing is concerned, we want to do what we can to support you guys as the real estate agents. And we want to make sure we can be flexible and quick. And then, John, I'm glad you talked about how speed works, because in that scenario that I had, we literally had a clear to close in 10 days, and we had another one in 9 days. So we can move quickly. Rudy, you look like you have someone in your mind. What's that?
Oh no, man, I'm just taking notes of what you are saying here, right? So that's good. John, I actually have a question, John.
Yes.
Can you go over on that? So what are you saying? So let's say I'm thinking of selling my house, or I'm thinking of buying a house.
Right.
So how is that? So you're gonna underwrite the property. So when I put an offer, there is no more. It's no longer subject to appraisal. Is that what you're saying?
Yes. In fact, I'll use an example I'm working with right now. Hugo called me up and gave me the client's information and also the address of the property he's making the offer. So I've already got an automated appraisal. Again, this is a bank level acceptance appraisal. They will accept what that value is showing. Okay, so now we can run a DU using that appraised value and using that appraisal. And if we get an appraisal waiver, that becomes part of the approval. The appraisal is already done. And as long as the buyer accepts the fact that we're going to waive the appraisal, in other words, they're saying, I don't need to have an appraiser go to the house and do a report. As long as they accept that, okay, we can use that automated appraisal. And we have it in writing that the lender has already approved it with the DU.
And just to piggyback on that, that's a good point, John. If you think about it, a lot of the houses were built and been around for like 50 years, and they have like 10 different appraisals through past history. So now with AI, with technology, the system, you know, is pretty much geared up to be able to tell you the value of the house. So if that number is coming in within reason, we have AUS, automatic underwriting system, that would automatically kind of tell us, yeah, you're within the market. And if you're within the market, then yes, we could go ahead and get that AVM. And it's been around for a long time, but you're starting to see it more. And I think COVID just kind of boosted that up to the front line, so you don't have to actually have someone in your house. So that's a good point, John.
That's it. So what is the best way, Carl? So if I'm a real estate agent, I'm thinking of, well, so if you're thinking of buying your home, here at your Home Sold Guaranteed Realty, we have access to homes that's not yet available to the general public, right? So these are homes that's not yet available online. So that's the easiest way to bid out multiple offers. Now, what is the best way to get in touch with you? And this is our mortgage team. These are the people that, if I'm buying a house for myself, right, I would call John, I would call Carl, I would call Jason, this team here. This is our mortgage team that I'm using, and I'm introducing it to the world. In fact, Carl, I think you're working with my wife now to get us a pre-qualification, pre-approval.
Yeah, absolutely. We have a few scenarios going on. You can call me directly. My cell number is 310-877-3612, or you can call our team number. We have a team hotline, which is 888-840-2275. We have it set up where it rings out to all team members. And we do have a couple of team members that's not on this call here today. So we'll come back later and we'll introduce them. And you guys will have plenty of options. Or you can call the office at Your Home Sold Guaranteed, and they can get in touch with us as well. And one other point I'd like to mention real quick, in regards to appraisal. Appraisal is kind of an interesting topic right now. We have a strategy called the appraisal gap strategy. So what do you do when you're bidding up these prices and it's going pretty high, and then all of a sudden you do have to have an appraisal, and then it comes in lower? Well, if you have a buyer that's putting 10% down or more, we have a program or a strategy, an appraisal gap strategy, to help that customer where you won't get caught into this war with the sellers on who's going to pay the difference. So if that value comes in $20,000, $30,000, $40,000 less, you don't have to go back and say, how are we going to eat this cost? We have a strategy, and we're using that through mortgage insurance to be able to help the borrower get into the property with relatively the same amount of money, and it's not going to cause your seller to have to come down on their price. And of course, with the agents, you're not going to lose on your commission. So we can talk about that, Rudy, on another call. It's called the appraisal gap strategy.
Yeah, that's pretty good, man. And like right now, Carl, can you talk? There's a lot of people who's thinking of buying a house now, and they're wondering why it's so important to get a full approval right now, right? So for example, my wife is thinking to buy another rental properties, for example, right? So first thing she did immediately, she emailed you, she called you and says, hey, what do I need? So can you go over, Carl, what is the documents? So two questions. Number one, what are all the documents that you need to get it a full approval? Second is, what is the difference between pre-qualification, pre-approval, DU approvals, and why? Question number three. It's a three-part question. and the last part is why it's so important to get it full underwriter approval. So let's use my wife as an example. So when my wife put an offer on that house, it's no longer subject to the approval. So now we can beat out the multiple offers. Can you share the difference and why it's so critical, especially for people who are thinking of buying now? You have to make sure you get all this squared away.
Yeah, absolutely. That's a good point, Rudy. What you want to do, basically, the main thing is getting this all set up ahead of time. And the reason you want to get this set up ahead of time is to allow yourself to go to the market knowing exactly what you qualify for, knowing exactly what your payments are going to be with no hiccups. So when you want to write that offer, if you choose to remove your contingencies, you could do that with confidence. So pre-qualification, we basically take a look at the information and we say, yeah, based on what you've provided, limited information, yes, we believe you can qualify for this. And we can even run that through desktop underwriting. But you heard the phrase, garbage in, garbage out. So if we don't put the right information in there, DU could literally come back and give us an approval and it's not really approved. So you want to make sure you're putting the right, accurate information in there. And that would lead us over to number two. We want to collect pay stubs, W-2s, bank statements. And when you fill out our system, we have an LOS system where we send you the link, you fill out that information, and it's kind of a smart tool. So depending on your answers, that'll take the questions to different levels of the conversation. So if you say I'm self-employed, you'll go down one road. If you say I'm W-2 wage earners, it'll go down the other road. And then at the end, it'll send you an automated list of all the things that we need. And those things on that list can include bank statements, pay stubs, W-2s, the basic stuff, tax returns, maybe or maybe not. Some cases we can only go with 1 year tax returns versus 2, even if you're self-employed. So we want to take a look at all that stuff ahead of time before you get into a contract, before you put those offers out there, so you know exactly what you're looking at. And then once we get past that process, and each person is different. Getting a mortgage is like a fingerprint. No two people are the same. So we may be able to get one client qualified. It take 10 minutes, and then it may take 2 weeks for another client, depending on your response time, depending on your documents and how detailed your overall file is. So we want to collect those documents upfront, get them fully underwritten, is basically taking those documents and having the underwriter look at it, shopping it and getting the best deal for you, having the underwriter look at it, go through all the conditions, get everything signed off. Now we can go ahead and move forward with a loan that's ready to go. And all we have to do is get basically past the appraisal, which John talked about that, and the title. We want to make sure the title is clear. So that would be a huge advantage. It's a little bit more work up front, but it saves you a lot on the back end. It brings a lot of clarity to the transaction, and it makes it easier for you as a homeowner to go out there and shop with confidence, even if you want to go ahead and move some of your appraisal contingencies or loan contingencies. So Rudy, I hope that answered your three-part question there.
Yeah, I mean, it's not only with confidence. Like that's the only way to beat out multiple offers. Because if you submit an offer subject to your Wells Fargo approval and you need another 2 weeks to get it approved, in today's economy, you will lose. You will lose before you even begin. Like that's what Jason was talking about. What did Jason say? The owner of the house will not, hey, Jason, when you are selling your house, Jason, right? Jason owns a lot of rental property. Now, Jason, when you sell your house, you have 20 offers on your home, Jason. And if I'm one of the offer and I submit an offer saying, hey, Jason, my offer is subject to me, my Wells Fargo, to approve this. I need another 2 weeks. So that's called, in the purchase agreement, you guys, it's called the loan contingencies, okay? So typically, the traditional buyers will put 21 days loan contingencies. So Jason, if you are selling your house and you have, let's assume you have multiple offers, and assuming everything being the same price, assuming everything being equal, one is already fully approved, one is subject to Wells Fargo to do whatever Wells Fargo need to do for the next 21 days. Which offer will you accept, Jason?
Of course, I'll accept the one that's already approved and remove the loan contingency.
Yeah, that's what you said at the beginning, right, Jason? That's what he said. So if not only you have to, so that's what we talk about. We are just trying to win. We want to win the house. So like the house, Jason, this weekend on Sunday, my wife was driving around and says, "Hey, maybe we are looking to buy another home." I say, "Okay, first thing we do, we get it approved." Now, Carl, assuming we give you the W-2 pay stub, tax return, and all the documents that you asked for, how long it takes you to get it approved?
Generally, the turn times, in some cases, like I said, no two mortgages are alike, but we've seen cases it can take 1 day, and we've seen cases it can take up to 2 weeks, depending on the scenario, because we see some very complicated scenarios where we're doing cross collateralization and all that stuff. But generally, 2 to 3 days is a fair time. Okay. And depending on, again, if you have W-2 wages versus self-employed, you have multiple accounts, all that kind of weighs in. And then we're dealing with turn times with underwriters and all that stuff. But generally speaking, it takes a couple of days, generally speaking.
What about this? Somebody said, well, if I get it approved with you guys, then you're gonna run the credit, and then somebody run the credit. So some people have this fear of running credit. I cannot even repeat what was the fear about? I don't even understand what's the fear, but.
Well, it's a good concern, actually. It's a legitimate concern. They don't want their credit scores to be deemed or have an adverse effect because they have multiple lenders running their credit reports. So for those individuals, I'll give you 2 things that we're doing for that. Number one, first understand that the system understands that you need to shop. You do need to shop. So you can have a couple of different lenders run your credit within a 30-day period, and it won't have an adverse effect as long as same industry within that time period. Now, of course, if you're shopping Macy's and you're doing Home Depot and you got all these other different creditors and it's more than 60 days, that will have an adverse effect. But if it's the same thing, it won't have an effect on it. That's number one. But number two, we also do soft pulls. Soft pulls is where it's not a hard inquiry. So you can't really, you're not going to get a ding on it because we may be only pulling it from one credit bureau or maybe 2, but it's not going to be a hard inquiry. And I think, John, you had mentioned once about some things and tips and tricks that we were doing for credit reports as well. Do you have anything you want to chime in on that?
As far as working with somebody with poor credit, is that what you're talking about?
Yeah,
or?
Challenge credit or just
Yes.
concerned about giving their information.
Yes. Well, as far as running the credit, I mean, ultimately, we do need to see that full mortgage credit report to see what's on it. If we do a soft pull and let's say we run Experian, let's say, there may be something on the other 2 that we need to know about for your home purchase. So at some point when they're serious or when you're ready, we do have to do the 3 credit bureau merge, which is the mortgage credit report. If there is some credit challenges, that's something that we would have to go from there and advise them on what to do. If it's one item, for example, that is not accurate, we have years of experience, all of us, all 3 of us, and we can take that challenge and confront it and get it removed in some cases. And that definitely bumps the score up quite a bit.
Yeah,
so
absolutely. Absolutely. We have a company that we use called My Credit Guy who helps us out with our customers who have some challenges on their credit. And then we also have another company that we partnered up with called LoanSense, who do an amazing job. And we just recently partnered up with them for student loan debt. This is something that we kind of had to go through a process. Like they say, you got to go through it to get to it. So we had a scenario where we have some student loan debt and we got LoanSense from back east. They're able to go in and renegotiate student loan debt. So if you ever come across those scenarios. But yeah, Rudy, that's what we're doing.
Yeah, I think it's a matter of trust, right? When people talk about shopping and stuff, the reason I trust you guys is because exactly what John is saying just now. One of your unique selling proposition is that you guarantee the lowest rate, but let's talk about that in details because you guys, John, you are so confident. If I get the lowest rate from wherever, I'll give it to you. Either you're gonna match it or beat it. But can you be a little bit like, how can you are so confident in that?
Well, I will admit there's some companies out there that will charge, let's say, below, or maybe they're doing a bait and switch. But we want to make sure to maintain our relationship with you. So we're going to do everything possible to make that happen. And, we'll chop our profit down if we need to. Okay, now that's not going to be on every deal, but if we need to do on one deal so that we make sure to do it, to be able to close a deal with you, that we're going to do it. Okay, and
That's
that's
why
what
you
I'm
are so
referring to.
confident.
We have the ability to control that and make sure that that deal gets done. Now, as long as the company that is giving the quote is willing to put it in writing, then usually they're going to give something that is legitimate.
Yeah,
And then we could look at that in writing and show you, here's where we could either match it or beat it.
yeah.
And we will do that every
I
time.
can even buy down the rates.
That's right. That's right.
Yeah, that's a good
That's why
point.
it's
Yeah.
always the lowest. The
Yes.
rest is pretty much okay. That's cool. Hey, Jason, last question for you, Jason. Many people ask, "Hey, is it a good time to buy?" Like, dude, I don't know how to answer that question. All I know is this: the people that work here at your home sold guaranteed realty, Michelle, Edward, I know you, Jason, my wife, right? We know we are all buying ourselves. So I don't know how to answer that other than look. Our action hopefully speaks louder than our words. But Jason, can you share from your perception, perspective? Because when people remember when coronavirus, COVID first hit last year in 2020, the people are asking you, should we buy? Should we buy? And I remember called Jason like, bam, Jason is already in escrow. He already bought, and he already make what 20,000-30,000 from the one that he bought less than last year. Jason, can you answer? How do you answer that question, Jason, when people are asking, is it a good time to buy?
Well, I do own rental property, so I have a lot of renters that want to rent, and they always tell me they're gonna wait for the market to crash before they buy. It just doesn't make any sense to me. If you have to rent and pay $2,500 a month, and in a year that's $30,000, if you wait 2 years, you already lose $60,000. Why don't you just buy? In the long run, the property value always gonna go up in the long run. And for the property that I bought last year in March, when the pandemic just happened, by now it has appreciated $100,000 because people thought the market's gonna go down. Instead, it went up, and it went up like crazy. People are bidding for houses right now, and we have such a big shortage of inventory. So I don't know how the market gonna crash when we have this kind of low inventory.
And
But
demand.
if you need to buy a house to live and you're renting right now, just buy, don't rent. You just like throwing your money in the trash for no reason. And people just don't get that. And for me, I would buy even now. It doesn't matter if you need to rent, just buy it and own your own house instead of paying the landlord, $30,000 a year for no reason.
I like it, Carl. That's so simple, and yet there's so much truth into it, right? Just use common sense. You are paying $3,000 a month times 12, $3,600. I don't care if the market go up and down. For sure, you already lose $30,000 this year.
Yes.
Jason, the economist. Okay, Carl, back to you. Anything else, Carl, about finance that you want to help people? We have many home buyers and real estate agents watching this. Is there anything else, last thing for all of you, as far as from the finance world, how to win in today's, to beat out multiple offers?
Well, the last thing I'd just like to close with, guys, like we talked about earlier, just go ahead and get the documents submitted as quickly as possible. Don't feel rejected if your offer is not accepted. Just keep plugging, because you'll find the more you keep going at it, you're going to find that ultimate house that you're looking for, and you want to be prepared and ready to meet the market. And the market right now is extremely hot. Put your best final offer out there, and we'll do everything we can on the financing side to make you look good. So give us a call again. We'll do what we can to help out, and we'll help coach you through the process. We'll do, like John mentioned earlier, we have over 20 years experience, each one of us, and we'll take that experience and the knowledge that we have to help you put together the best possible offer package you can.
All right, thank you. Okay, guys, so today is finance. It's all about finance with our mortgage guys here, Carl Brackens, John Abel, Jason Tan. If you have any questions, you can call these guys directly. You have their cell phone. If you don't have, you can call your home sold guaranteed office, and we will give you their cell phone. Call 626-789-0159. Again, 626-789-0159. Like Jason said, if you're looking to buy, we have access to homes that's not yet available to the general public. Call 626-789-0159. Anything else, Jason?
No, that's all I have for now.
All right, guys, make it a great day, everybody.
Thank you.